Good evening. Of course, we start on the biggest story today, and that is the GDP growth numbers that were released by Stats SA. Agriculture, manufacturing and mining were some of the key drivers of that growth that we saw in the second quarter, as the economic growth rose by 0.6% in the 2 months, in the 3 months rather, of the year, and this puts paid to some of the issues that have been stifling economic growth in the country. For more on this story, we are joined by Professor Adrian Saville, who is the Professor of Economics at the Gordon Institute of Business Science and also the investment specialist at Genera Capital. Professor Saville, thank you very much for your time this evening. There were a lot of forecasts and there was a lot of consensus before today's GDP growth numbers. Real GDP grew by a stronger than expected 0.6% quarter-on-quarter in the second quarter. Does this meet your expectations? Because we saw some expectations that the economy would expand at least by 0.9%.
Yeah, well, the 0.9 was, at the top of expectations. The consensus was for a more moderate number, about half of the 0.6. So, it's taken at face value. This is ahead of expectations, and read very superficially, you could say, well, that's a good result. We got better than what most people expected. That's the silver lining. The dark cloud is that it remains the case that growth is extremely sluggish. Stepping back from the better news than expected, it remains disappointing, and it's sequential. We've been stuck in this very low growth path for a number of years.
Professor, what exactly does it mean for jobs and other things that are quite important in South Africa, that we are experiencing this rut when it comes to GDP growth? Because when you look at also the GDP per capita, we're not looking good there as well. What do you make of the fact that the boost came from recoveries, somewhat recoveries in manufacturing, mining and agriculture, also amplified by the growth in finance, real estate and business services?
There are some small pockets of encouraging news in there. The one is that whilst agriculture is a very small sector, it put in a strong performance. That helped. So if we look at the different sectors, manufacturing was the standout because of its size and its relative performance. The big drag on the overarching performance comes from the energy deficit and energy insecurity, which remains a major obstacle to economic growth. And it's not that economic growth is the be-all and end-all in terms of solving South Africa's unemployment crisis. We need more than economic growth. We need industrial restructuring. But that industrial restructuring remains an absolutely academic exercise or initiative in the absence of repairing South Africa's two critical infrastructural channels, the one being energy security and reliability, and the other being the transport infrastructure. So those are necessary conditions in order to get South Africa into a improved economic growth path that then comes with job creation. There is a flicker of a brighter light if we look at economic growth from a spending perspective, and that comes in particular from the improvement in gross fixed capital formation. In your and my language, investment spending. Investment spending is long-term in nature. It's a commitment to the economy, and investment spending of all of the different components, government expenditure, household expenditure, exports, it's investment spending that has the highest multipliers and the greatest implication for economic growth. So it's a positive light, but it's not high enough, and it hasn't been an improvement that is sufficiently sustained.
Isn't that interesting, really, that when you talk about the energy deficit that characterized the second quarter, it's something that other analysts are also saying that, but that deficit led to business and government investing more, including households, in renewable energy and the other sources of energy. Is that sustainable, or is it something that was just for that particular period?
So perversely, I think your point is on the money. Perversely, I think that the investment spending, the gross fixed capital formation that I'm talking about, is actually spending that is overwhelmingly replacing the existing energy infrastructure. By way of example, if you look at a big item of imports, it's import of capital equipment. And I think that that's the stuff that's going into the energy replacement infrastructure.
Professor, if I'm an investor sitting overseas, I'm looking at South Africa as an investment destination. Some are saying that South Africa is not as attractive when you look at the neighbors like Namibia and other counterparts, and even BRICS countries that we are a part of, who are competing for the same amount of money. With that being said, how is the outlook for the rest of the year? Because it has been quite in the doldrums when you look at the forecast being somewhere around 0.3%. Are you changing your forecast for 2023 as a result of what happened in quarter one and now quarter two?
My expectation at the beginning of the year was that South Africa would be fortunate to achieve much more than 0% economic growth. I remain of that view. Even then, if we do get better than zero, it's going to be a very low number. It'll take us back to your opening observation about when you adjust for population growth, we've been in a per capita income recession for more than a decade. And that if South Africa is going to get in any shape or form serious about attracting capital, both domestic capital and foreign capital, and building a competitive economy, we necessarily need to do two critical things. The one is recognize that we are competing, as you point out, in a global landscape. We have to put ourselves up against Vietnam, the Philippines, Chile, and recognize that those are the destinations that we have to weigh ourselves up against. And the second is, for that to happen, we have to fundamentally get on with these structural reforms that we have been talking about. I don't remember how many times you and I have met and discussed these structural reforms that remain a talking point, not an action point.
Professor Adrian Saville is an investment specialist at Genera Capital and Professor of Economics at the Gordon Institute of Business Science. It's always a pleasure to speak to you, and thank you for your time this evening. A lot of work that South Africa has to do, of course, in boosting economic performance and putting a dent on unemployment levels that are quite high in the country.